Something is happening right now in the stock market that most people are going to look back on and say, I wish I had paid attention when it mattered. Because right now, in the middle of all this red, all this selling, all this fear, the smartest money in the room is quietly doing one thing: buying. And that is exactly what we are going to break down today, because there are 5 stocks on the radar right now that are setting up for what could be some serious moves. So stay right here, do not touch that back button, because by the end of this video, you are going to have a clear picture of exactly where the opportunity is hiding inside this mess. Before we get into it, if you are new here, this is Ticker Hawk. And if you want real talk about what is actually moving in the market every single week, go ahead and hit that subscribe button right now. Tap the notification bell too, so you never miss a video. And if you find value in what we do here, drop a like before you go. It literally takes 2 seconds, and it helps more people find this channel. Now, let us get into this, because the market is giving us a moment right now, and you need to understand what is going on. So let us set the stage here. Markets are red. Not just US markets either. We are talking red across the board globally. Europe is down. Asia got absolutely hammered. And right here at home, every major index is pulling back hard. The Nasdaq is feeling the most pain by far, down well over 2% as of today. The S&P 500 is off about 1%. The Russell 2000 is down close to 0.5%. The Dow is basically flat, barely clinging to any green at all. So when you look at the landscape of the market today, it looks ugly on the surface. But here is what most people are missing. The reason for this sell-off is actually very specific, very contained, and in a strange way, it is creating opportunity in some of the best names on the planet. What is driving all of this? It comes down to one sector: memory chips, semiconductors, and one earnings report that the entire market has been circling on the calendar for weeks now. Micron Technology, ticker MU, is reporting earnings after the bell today. And the market is absolutely terrified heading into that print. Micron is down double digits on the day. And that fear is spreading like wildfire across every chip stock, every semiconductor name, every AI infrastructure play you can think of. NVIDIA is down. AMD is down. The entire space is getting hit hard. And that ripple effect is what is dragging down the broader indexes. Now here is where it gets really interesting. Look at what happened in South Korea today. The South Korean market dropped about 10%. That is not a typo. 10% in a single session. And why? Because 2 companies, Samsung and SK Hynix, dominate the South Korean market to an almost unbelievable degree. Those 2 names together account for more than 54% of the entire Korean composite stock price index. So when memory stocks take a hit globally, the South Korean market does not just pull back a little, it collapses. And that is exactly what we saw today. Samsung and SK Hynix combine for something in the range of $2.7 trillion in market cap. And when they go south, so does everything else over there. Even European markets felt the pressure, with the Vanguard FTSE Europe ETF, ticker VGK, pulling back roughly 1%. Not nearly as severe as what happened in Korea, but the global nature of this sell-off tells you something important. When fear hits, it spreads everywhere. But fear that is rooted in one specific event, like one company's earnings report, tends to reverse quickly once that event passes. And that brings us to the heart of what we are talking about today. Because Micron is not just some random chip company. This is the dominant player in memory and storage technology in the United States: DRAM, NAND, HBM, high bandwidth memory for AI applications. Micron is at the center of the AI infrastructure build-out that every major tech company on Earth is currently pouring billions of dollars into. Data centers need memory. AI models need memory. Every time a server processes a machine learning task, memory chips are working overtime. Micron sits right in the middle of all of that. And yet today, the stock is getting absolutely smashed. Down 10, 11, maybe 12% heading into earnings. The chart had gotten extended, no question about it. The stock ran hard and got overbought. But here's the thing about overbought stocks that are fundamentally strong. They tend to pull back, shake out the weak hands, and then resume their trend. That is a pattern that plays out over and over again in names with real earnings power behind them. Now let us zoom out for a second and talk about the broader picture. Because the 5 stocks we are covering today are not all chip stocks. This is not just a semiconductor conversation. This is about identifying where institutional money, the smart money, tends to step in when the market gets shaky. And today's action is giving us a rare window into that setup. The first name on the list is Micron Technology, ticker MU. Micron has transformed over the last 2 years from a cyclical, boom and bust memory company into one of the most compelling AI infrastructure stories in the entire market. HBM, high bandwidth memory, is essentially the jet fuel that powers the most advanced AI chips on the market today. NVIDIA's H100 and B200 chips use HBM, and Micron is one of only 3 companies in the world that can manufacture it at scale. The demand for HBM is projected to grow at multiples of what the supply can currently produce. That means pricing power. That means margins. That means earnings that can keep beating expectations for multiple quarters in a row. Now, the fear today is that even if Micron beats earnings, the stock might sell off because the good news is already baked into the price. That is a valid concern. That is exactly what happened the last time they reported. They crushed the numbers, guidance was strong, and the stock still dropped 30% because investors had already priced in perfection. But here is what is different this time. The stock has already pulled back heading into the print. The fear is already out there. The weak hands are already selling. That sets up a very different dynamic for the post-earnings reaction. A stock that has already pulled back 10 or 12% into a strong earnings report is in a much better position to move higher after the report than a stock sitting at all-time highs with zero fear priced in. The second name is NVIDIA, ticker NVDA. If you have been following the market closely over the last 2 years, you already know that NVIDIA is not just a chip company anymore. It is the infrastructure layer for the entire artificial intelligence economy. Data center revenue, software revenue through CUDA, networking revenue through InfiniBand, and now expanding into robotics and autonomous systems. NVIDIA is getting hit today simply because of the contagion fear around memory stocks and semiconductors broadly. But when you step back and look at the fundamentals, nothing has changed. Hyperscalers are still spending. Microsoft, Amazon, Google, and Meta are still in the middle of the most aggressive AI capital expenditure cycle in history. NVIDIA is the primary beneficiary of that spending. A pullback in NVIDIA is not a reason to run. For the right investor with a multi-quarter time horizon, a pullback in NVIDIA is an invitation. Drop a comment below and tell me if you are adding to your NVIDIA position here or if you are waiting to see how Micron earnings shake out tonight. The third name is Advanced Micro Devices, ticker AMD. AMD tends to get overlooked in conversations about AI infrastructure because NVIDIA dominates so much of the mindshare. But AMD is playing a very real and very important role in the AI hardware ecosystem. AMD's data center revenue has been growing at triple-digit rates year over year. Their CPU business and servers remains extremely strong, with ePUIC processors taking market share from Intel at a pace that would have seemed impossible just 3 years ago. And the AI inference market, which is where you run models rather than train them, is expected to grow even faster than the training market over the next several years. AMD's chip architecture is particularly well suited for inference workloads. That is a catalyst that most retail investors have not fully priced in yet. Today, AMD is down hard because of the semiconductor fear. That is your window. Not as a get-rich-quick play, but as a high-quality name trading at a discount because of sector-wide panic that has nothing to do with AMD's own business trajectory. The fourth name is SanDisk, ticker SNDK. SanDisk reemerged as a publicly traded company after being spun out of Western Digital, and it has been on an absolute tear. The stock was running hard for weeks, getting pretty stretched on the chart, and today it is getting punished along with every other memory and storage name out there. Down 12% on the day. But here's the thing about SanDisk. Flash storage is not going away. NAND demand is driven by smartphones, laptops, data centers, and enterprise storage systems. As AI workloads expand, the amount of data that needs to be stored and accessed quickly grows in direct proportion. SanDisk sits at the intersection of consumer and enterprise storage, and they have been executing on their roadmap well since the spin-out. Today's sell-off in SanDisk is not driven by any news specific to SanDisk. They do not have earnings today. They are simply caught in the crossfire of the memory sector fear around Micron. When the sector calms down, and it will, SanDisk is likely to recover a meaningful chunk of today's losses. That makes it worth having on your watch list right now. Go ahead and hit that like button if you are finding this breakdown useful. It helps the algorithm push this video out to more people who need to hear this kind of analysis, especially during moments like today when the market feels chaotic and everyone is looking for answers. The fifth name on the list is the Direction Daily Semiconductor Bull 3X ETF, ticker SOXL. Now I want to be extremely clear right up front. This is not a buy and hold investment. This is a trading instrument. SOXL is a 3 times leveraged ETF that tracks semiconductor stocks. When the sector goes up by 1%, SOXL goes up by roughly 3%. And when the sector goes down by 1%, SOXL goes down by roughly 3%. Today, with the semiconductor sector getting hammered, SOXL is down 20% on the day. 20% in a single session. That tells you everything you need to know about how powerful and how dangerous this instrument can be. If you're a novice investor who has never traded leveraged ETFs before, please do yourself a favor and steer clear of SOXL entirely. This is not the right tool for someone who is still getting their footing in markets. But if you are an experienced trader who understands position sizing, who is treating this purely as a short-term trade, and who has done the homework on what drives semiconductor stocks, then the current dislocation in SOXL is absolutely worth paying attention to. The trade thesis is straightforward. If Micron reports strong earnings tonight and guidance is solid, you are going to see a sharp relief rally in semiconductor stocks tomorrow. Micron bounces, Nvidia bounces, AMD bounces, and SOXL, because of its 3 times leverage, could recover a substantial portion of today's losses very quickly. That is the opportunity. It is not complicated, but it requires discipline, tight risk management, and a smaller allocation than you might be tempted to take. Now let us talk about what the smart money is actually doing today, because this is the most important part of the whole conversation. When you see days like today, when every index is red, when the news feels scary, when global markets are selling off, there is an instinct that kicks in for most people. The instinct is to do nothing, or worse, to sell. And that instinct, while completely understandable, is exactly what separates the average investor from the investor who actually builds wealth over time. The investors who built real lasting wealth in the stock market did it by leaning into fear rather than running from it. They bought Micron when it was down 30%. They bought Nvidia when the consensus called it a bubble. They bought AMD when everyone said Intel would crush them. They bought during the moments that felt the most uncomfortable and held through the moments that felt the most uncertain. That is not reckless. That is disciplined, long-term thinking applied consistently over time. Now, that does not mean you buy everything blindly on a red day. The key is understanding why something is selling off. Is it selling off because the business is broken? Because earnings are deteriorating? Because the competitive landscape has shifted in a way that makes the future look fundamentally worse? Or is it selling off because of sector-wide fear, because of one earnings report, because of contagion from a market halfway around the world? If it is the latter, that is where opportunity lives. And today, for Micron, for Nvidia, for AMD, and for SanDisk, the sell-off is clearly in the latter category. Nothing fundamental has changed in these businesses today. The only thing that changed is sentiment. And sentiment is the most reversible thing in the entire stock market. Here is what you also need to keep in mind as we head into Micron's print tonight. The broader context for semiconductor demand has not weakened. It has actually gotten stronger. The AI infrastructure build-out is accelerating. Microsoft committed to $80 billion in data center spending for the current fiscal year. Amazon is expanding AWS capacity aggressively. Google is doing the same with Google Cloud. Meta is running one of the most aggressive AI infrastructure build-outs in its history. All of that spending flows downstream into chip demand, memory demand, and storage demand. Micron is not reporting into a weak environment. They are reporting into one of the strongest demand environments for memory and storage that has ever existed. The question tonight is whether the stock's recent run has already priced all of that in, or whether there is still room to run higher after the print. That debate will set the tone for the entire semiconductor sector going into the next several weeks. Share this video with someone you know who is watching their portfolio bleed today and wondering what to do. Because the message here is simple. The best investors in the world do not panic on red days. They assess, they analyze, and when the setup is right, they act. Whether that means adding to existing positions in high-quality names like Micron, Nvidia, or AMD, or watching from the sidelines tonight to see how earnings shake out before making a move, the important thing is that you're thinking clearly and acting with intention rather than reacting out of fear. One more thing before we wrap up. The chart on Micron, despite today's brutal sell-off, is still intact on a longer time frame. Yes, the stock got overextended. Yes, it needed to pull back. But the trend that has been building in Micron over the past year has not been broken by a 10% sell-off heading into earnings. In fact, for a stock that has made the kind of move Micron has made, a healthy pullback into a major earnings catalyst is actually a normal and necessary part of the process. The stock needed to digest some of its gains. It needed to flush out the momentum chasers and the short-term speculators before it could build a more durable base for the next leg higher. Today might just be that flush. And if Micron delivers tonight, you could see a very sharp snapback across the entire semiconductor space. That would lift Nvidia, AMD, SanDisk, and names throughout the supply chain that have been unfairly dragged down today. That is the opportunity sitting right in front of us. It is uncomfortable. It is not clean or easy. The best opportunities rarely are. But for investors who do the work, manage their risk, and have the patience to let a thesis play out, days like today are not something to survive. They are something to take advantage of. Stay tuned to Ticker Hawk as Micron reports tonight, and the market reacts in the hours and days ahead. If you have not subscribed yet, do it right now. Hit that subscribe button, drop a comment below telling me which of these 5 names you're watching most closely, and give this video a like if you got something out of it today. I will see you in the next one.